Most beginner investors think losing money comes from choosing the wrong stock, but the real danger starts way before you even click buy. And chances are, you're making at least one of these mistakes without realizing it. Hey everyone, in this video, I'm going to expose 5 of the most common investing mistakes Americans make. And more importantly, how to avoid them so you don't accidentally sabotage your financial future. Here's the scary part. Over 60% of new investors lose money in their first year, not because the market is cruel, but because tiny errors snowball into expensive lessons. But don't worry, by the end of this video, you'll know exactly how to dodge those traps. And mistake number 3. That one destroys more wealth than bad stock picks and recessions combined, so make sure you don't miss it. Let's dive into the first mistake, because it starts earlier than you think. Mistake 1. Investing without a goal. Most beginners invest like they're reordering from a mystery menu. They put money somewhere and hope it works out. That's not a strategy, that's financial roulette. When you invest without a goal, you don't know how much to invest, where to invest, or how long to stay invested. And here's the quiet danger. Without goals, panic becomes your default strategy. How to avoid it? Before investing a single dollar, ask yourself, am I investing for retirement, a house, passive income? When will I need this money? How much risk can I stomach? Once you answer these, you unlock clarity, and clarity beats panic every time. Imagine walking into the gym and shouting, "Make me healthy," without a workout plan. That's how most people invest. Now, you might be thinking, okay, I'll set a goal. What next? Well, that leads us to the second mistake. And this one is sneaky, because people think they're being smart while actually losing money. Mistake 2, trying to time the market. Timing the market is like thinking you can jump onto a moving train, blindfolded while juggling. Impossible. Maybe smart? Absolutely not. A lot of beginners wait for the perfect dip or try to predict crashes. But here's the data Americans don't realize. If you missed just the 10 best days in the stock market over the past 20 years, your returns would be cut in half. Half. How to avoid it? Use dollar cost averaging, invest small amounts consistently over time. Instead of guessing the perfect moment, let time and consistency do the work. Because if you think timing the market is dangerous, wait till you hear the next mistake. This one drains wealth so slowly you don't even feel it until years have passed and you're way behind. Mistake 3, ignoring fees and taxes. This is the silent retirement killer. Most beginners jump into investments without checking expense ratios, trading fees, or tax implications. And the worst part? Fees don't feel painful. They just quietly rob your compounding. For example, a 1% annual fee on a $10,000 investment over 30 years can cost you over $100,000 in lost returns. And selling investments too often? You could be slapped with short-term capital gains taxes up to 37%. How to avoid it? Choose low-cost index funds or ETFs. Use Roth IRAs, 401ks or HSAs. When possible, avoid frequent trading unless you enjoy tipping the IRS if fees and taxes were a person. They'd be that friend who forgets to pay you back but still shows up at every dinner. Now let's talk about the behavior that destroys more beginner portfolios than fees, taxes, and bad timing combined. Mistake for panic selling and emotional decisions. Picture this. The market dips, your account drops. Your brain whispers, it's all crashing. Get out now. Then, a few weeks later, stocks recover, and you re-sitting on the sidelines like a kid who left the roller coaster right before the loop. Most beginners react emotionally because they don't have a plan. They buy when markets feel safe and sell when they feel scared. Literally the opposite of what wealthy investors do. How to avoid it? Expect volatility. It's normal, not a warning sign. Remind yourself, Downturns are discounts, not disasters. Only invest money you won't need for at least 3 to 5 years. Here's the irony. The stock market has always recovered, but many people don't recover from their own panic. Stay with me, because the last mistake sounds harmless, but it can delay your financial goals by a decade or more. Mistake 5. Waiting too long to start. Some people think they need $1,000, $10,000, or the perfect time to invest. Meanwhile, their most powerful weapon, time, slips away. Let me prove it. If you invest $200 a month starting at age 25, you could have over $430,000 by 65. If you start at 35 with the same amount, same money, less time, massive difference. The fear of not having enough to start is how people lose years of compounding, and compounding is not something you can just make up later. How to avoid it? Start small. Even $50 or $100 a month gets the compounding engine running. The hardest part isn't growing money, it's beginning. Waiting to invest until you're ready is like waiting to shower until you re-clean. Let's recap the 5 beginner investing mistakes that quietly cost Americans their financial freedom. Investing without a goal, trying to time the market, ignoring fees and taxes, panic selling, and emotional decisions waiting too long to start. Here's the truth. You don't need to earn 6 figures, pick magical stocks, or predict recessions to build wealth. You just need to avoid the mistakes most people walk right into. The difference between struggling with money and growing it comes down to action, not perfection. So ask yourself right now, are you investing with intention? Are you letting fear stop you? Or are you quietly losing years waiting for a better time? Because that time is now. If you're serious about growing your money and building long-term security, the next video on this channel will show you exactly how to start investing step by step, even with as little as $50. And trust me, you do not want to miss mistake number 3's solution in action. Thanks for watching, and if this opened your eyes even a little, hit subscribe and stay ahead of the financial mistakes 70% of beginners still make. Your future self will thank you.